This video is sponsored by PelucidFX.com. Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay guys, now let's take a look at the gold market. Well, as you can see, on the daily chart, market has rebounded up from the area that we have specified as the crucial level for the bulls. And in fact, that was the last hope in the short-term perspective for the bulls to start any meaningful retracement to the upside. That is an area around 1280. It was the weekly pivot support one on the previous week. Also, that is the crucial FIB support level that could give some hope for upward rebound on the gold market. As I said in the research of the euro currency, on the gold market the situation is very similar because we have very significant information on the higher time frames chart, especially on the monthly and weekly charts, because on the monthly chart we have the bearish stop grabber. And if you will take a look at this picture in our weekly research, you will see that the invalidation point of this pattern stands approximately around 1390 area, and the target of this pattern is lows around 1170s. They should be cleared out by the as it's assumed by the pattern itself. Of course, any pattern could fail, but right now theoretically it stands as I have just described. Meantime, in the recent weeks on the gold market, we have seen a lot of failures of the bullish patterns. First of all, we saw the failure of the bread and butter buy. That should lead market to the 1350, but market has reached only the yearly pivot point and has moved down. After that, we saw this failure of this double bottom pattern that also could trigger the upward action. And right now, the final moment, this final pattern that could be formed here is in the chart, some kind of the ABCD pattern. Maybe here we could get some kind of the butterfly to the upside. That's the maximum that we could expect from the market right now. But take a look at that. Even reaching of the 1350 area will not erase the bearish stop grabber pattern that has been formed here. All that market could do right now is just to postpone the start movement to the downside. Instead of this ABCD pattern, market could show this ABCD pattern, maybe something of that sort. The one reason that I see for a possible appreciation of the gold market is really unpredictable and unexpected negative geopolitical tensions. Because you probably guys already know that there are new tensions in the Ukraine, in Odessa. A lot of people were burned alive in the building, so the tensions around the Slaviansk becomes even worse. So you can see it's very difficult to predict what geopolitical steps from the Russia and from the United States, from the European Union could follow as the reaction on the current events in the Ukraine. That's why only I think if really something bad will happen, maybe gold market really could show the significant appreciation here above the 1350 area, because as you understand, right now there are a lot of bearish signs on the gold market except geopolitics. I mean, the recent data on the United States non-farm payrolls suggests continuing the tapering of the quantitative easing program, lack of inflation, increasing situation in the economy, and the hopes and the forecasts of the possible rate increasing. That makes possible appreciation of the gold market was very difficult. Also, gold market right now stands at the seasonal bearish trend that also does not add chances to the appreciation of the gold market. So I suspect that current action on the gold market mostly is based on the tensions in the geopolitics rather than some fundamental economy data. So that's why from the economy point of view, from the technical point of view, currently it's very difficult to suggest any action above than 30-50 area. So I can find reason for reaching that area. These technical reasons and economical reasons, that's butterfly. I can find reasons to reach the 1370. That could be ABCD pattern. But to forecast right now the possible action would be above the 14 even area, well, we don't have reasons for that. So that's why right now we will focus on nearest target, and after that we will see what will happen. So if you're bearish on the gold market, for you it's better to wait some reaching of the resistance area and watching for price behavior around it. The first area that we should watch for as the resistance is the 1315 area, the upper border of this confluence resistance. The next area will be probably 1345, 1350 area. That's if you have the bearish view on the market. If you have bullish, let's take a look at the 4-hour time frame chart. On the 4-hour time frame chart, on the daily time frame chart, we also have this 2 days bullish grabber that suggests the taking out of these highs. Okay, that's the short-term bullish pattern. On the 4-hour time frame chart, we see with more precision what level market could reach. That is 1311 area, 1312 area approximately. That's the target of this A, B, C bottom pattern. That's also weekly pivot resistance one, and that is very close to the Fib resistance on the daily chart. Here we see some kind of the reverse head and shoulders pattern that we have discussed previously, and that pattern gives us huge assistance. So if you're bullish, you should watch for not very deep retracement down, because in market mechanics of the gold market in the current situation doesn't suggest any deep retracements, because market already has formed the bottom of the right shoulder. That's recovery out of the bottom, and market in such circumstances, market should continue move high if it's really bullish and it's really has intention to reach the target of the at least target of the head and shoulders pattern. That's why any significant retracement here should be treated as the weakness and some error in bullish sentiment. So that's really will be some warning sign if market will move below the weekly pivot point on the coming week and continue move down. This will mean that you should not take any long position. The area that is very suitable for taking the long position you can find on the hourly time frame chart. So you can see that right around the weekly pivot point stands confluence support. Here on the hourly time frame chart it looks wide, but in reality that stands approximately $3, so it's really not very wide. 1290.89, 1292 area. So you can see this is really strong support, and market really bullish, it should not pass through it. If this will happen, then do not take long position. It will mean, as I said, that something wrong with the bullish sentiment, with the bullish development here. So that's our short-term view on the gold market. That being said, although in the short-term perspective we see some bullish signs and maybe market really will show some significant appreciation, but right now is a bit early to speak about drastic shift in the long-term sentiment, because we have the long-term pattern on the monthly time frame chart that suggests the action to the new lows. And finally, right now we see only the one reason that could trigger significant appreciation of the gold market is the really bad and unexpected, awful geopolitical tensions. If they will appear, then it's really could shift the gold market from top to bottom. But meantime, let's be focused on the nearest target, and particularly on 4-hour head and shoulders pattern and a 4-hour ABCD pattern that should lead us to the 1312, 1315 area.